Welcome to Wales Tech Week 2021. Thank you to our partners. Enjoy the session.
Good morning, everybody, and welcome to the Welsh Businesses Bringing Blockchain to Life panel event. We've got a very exciting session. Well, I say exciting. I'm hoping it's going to be an exciting session for everybody today, discussing some Welsh businesses that are really bringing blockchain to life. We've got a good mix of enterprise blockchain solutions, blockchain for the public sector, and even somebody who's able to talk about the booming crypto and digital asset space. So hoping that there's going to be a very exciting event ahead for us. My name's David Blake, and I am an investment executive for the Development Bank of Wales. I'm somewhat interested in the blockchain space, having built a number of blockchain solutions, both using Hyperledger Fabric and Ethereum. I tend to find that I'm discussing a lot of blockchain opportunities with businesses in Wales, as well as companies that might be looking to move to Wales, as well as being part of the Blockchain Connected Steering Committee, which is obviously affiliated with the Technology Connected Group, who've obviously put together this week for us today. So I guess without further ado, what I would like to do is introduce the rest of the panel. If we can bring them all on screen, we've got Imtiaz Khan from Cardiff Met. We've got Nish Kotecha from Finboot, Sharon from Coincover, and Webberley from Simply Do. Guys, I guess if we could start with Imtiaz, would you like to just give us a bit of an introduction to yourself?
Hi, I'm Imtiaz Khan. I'm an associate professor in data science at Cardiff Metropolitan University School of Technologies. So here in Cardiff Metropolitan University, I lead a Center for Industry 4.0 and blockchain research, where most of our research is more on both in crypto currency as well as crypto governance space, as well as we do a lot of Internet of Things that is applicable for Industry 4.0. And also I'm the program director for Apprenticeship Data Science program, which is with the Office of National Statistics. And also in this program, we are first of introducing blockchain-based modules. Thank you.
Nish, would you like to?
Yes, thank you, and thanks, David, for the introduction. I'm Nish Kotecha. I'm one of the co-founders of Finboot. I'm also the chairman. Finboot is a technology company whose mission is to give our world-class customers the ability to incorporate blockchain capability as part of their digital transformation. We are living in a COVID-accelerated digital world, and blockchain is an important part of that tool set. We developed a product called Marco. Marco is an ecosystem that goes from a middleware all the way up into applications, and it allows organizations to operate in multiple ledger technologies simultaneously, switch between ledger technologies, all the way up into an application suite, making blockchain usable and practical from a user standpoint. So we take blockchain complexity, turned it into a product, and make it available for organizations to use quickly and efficiently.
That's a great introduction. Thanks, Nish. Sharon?
Hi, everyone. My name is Sharon, and I am Chief Product Officer at Coincover. We're a Welsh business. We've been around since 2018, so we're obviously a fintech, insurtech startup. And basically, our mission in life is really about keeping cryptocurrency safe for everybody, and subsequently enabling more people to get into cryptocurrency, because we think it's a very exciting subset of the larger blockchain ecosystem. So obviously cryptocurrency was one of the founding applications upon blockchain. And our team, the founding team of Coincover, all met actually about 7-8 years ago while working for the British Royal Mint. And we were tasked with looking at the future of currency. So the Royal Mint strikes the coins that we don't quite use so much these days. And so it was about, okay, well, what is the future? So we looked at digital currencies, we looked at credit cards, digital payments, and stumbled across Bitcoin. And thought, okay, this is some really great technology here, but it's not exactly a great thing for an everyday currency due to its fluctuations and other kind of material problems at the time. And so we thought, well, you know what, we can solve for that problem. And what we did was we actually took gold, we digitized gold, put it on a blockchain, built wallets and the whole ecosystem, and essentially made available Royal Mint Gold, which facilitated essentially peer-to-peer payments and remittances. And we launched that back in 2016, and it was at the time the world's first gold-backed stablecoin. Now, as you can imagine, working for a government entity, you had to really keep that safe, secure, not just the physical gold, but very much so the digital gold, and making sure you knew who exactly owned it. And to cut a long story short, the team essentially then formed Coincover, took all of the knowledge about how to keep cryptocurrencies, infrastructures, wallets, platforms safe, and we offer those services to primarily we offer it to consumers, but through retail investors, and we basically offer things like cryptocurrency theft insurance, key storage, and we also were actually the first company to launch a product called cryptocurrency wills, which is essentially solving the problem or answering the problem of what happens to your crypto when you die. So again, we're a Welsh-based fintech, and we're all about keeping cryptocurrency safe and secure.
Thanks, Sharon. Am I right in saying, just quickly, that people losing their keys for their digital wallet is actually quite a big problem? And this would overcome it?
Absolutely. I mean, there's kind of two major threat vectors for people in crypto. The first is actually losing your keys to your wallet, your password, and the way that blockchains and cryptocurrency is set up. If you lose it, you're essentially out of luck. And so we basically provide secure backup for that. The other vector is theft. So there's kind of like lots of cybersecurity attacks and things towards wallets, platforms, and nefarious people just go in and steal the contents of somebody's wallet. So the crypto is just stolen. So those two vectors collectively, lost access or theft, are the two major concerns that most consumers have when looking to get into crypto. And we essentially solve for that by preventing both aspects there and keeping crypto safe.
I find it an absolute nightmare when I think about the passphrases and stuff that I need. you just worry about it, wouldn't you? So thank you very much for that, Sharon. And then Will, then please.
Cool. Hi everyone. So hi, I'm Will Webberley. So I myself have lived in Cardiff now for the last 14 years, and I've been CTO at Simply Do Ideas, which is a Welsh company now since 2016. We're based in Cardiff as well. So at Simply Do, we essentially build a B2B platform that we license to kind of enterprise level organizations. So it's typically across public sector, so mainly government, healthcare and police, but also in the kind of large engineering kind of space, and a little bit in the education space as well. And so the platform aims to kind of help these organizations to innovate, which sounds kind of buzzwordy, but it's essentially around supporting businesses in continuous improvement efforts. And so this is either by helping them engage better with their own employees, or perhaps engaging better with the kind of supply chain, which could be from around the world, or a global group of companies actually coming together to collaborate in order to allow the kind of global innovation effort. And so, unlike kind of others on this call, perhaps we're only very new to the kind of blockchain world, and we're kind of learning as we go along. But it's been a great project for us so far. And so we're kind of using it to address some of our kind of later challenges, particularly in that kind of supply chain space, that kind of supplier-led kind of innovation space. It's mainly we're using it to kind of solve these issues where you have multi kind of party agreements between different organizations around the world. And we're hoping that the kind of the inherent nature of blockchain, the ordered series of events, the immutability, and lots of other kind of facts we'll talk about, I'm sure, later in the call, will help us kind of solve these issues in a kind of transparent way that is indisputable across the different parties involved. So yeah, so that's me, and yeah, looking forward to hearing what others say on the call as well.
Thanks for that, Will. And I guess, as you touched on, the really interesting, I think, piece that you'll be able to bring to this discussion is being a business that has had, a non-blockchain solution, and now you've actually decided to start implementing, a new product that is going to be based on this. So I think that will really help to kind of explain to others the process that you've been going through. So thank you very much for that, and obviously thank you to everybody for being here today. I'm very grateful that you all made the time to be able to discuss your knowledge of this space with obviously the people who are tuned in for us today. So with that in mind then, I guess, could we start with the question, why in your opinion there is so much excitement around blockchain, and what would you say to the naysayers? Nish, can we kick that to you, please?
Sure, thank you. Take a step back, and I used the word very carefully in my introduction. We're in a COVID accelerated digital world, economy, environment. Everything is moving to a digital infrastructure much faster than we ever anticipated. Satya Nadella famously said a few months back, we've seen digital transformation that would have taken 2 years in 2 months. And that journey is not stopping. Warren Buffett, the famous investor, has a quote that says, it's only when the tide go out, you'll see people who are swimming naked rather. And companies, are they now swimming naked if they don't have a digital transformation journey, not only on paper, but in implementation? And what is that world that we're now trying to build? In my view, it's building back better, right? And better is all about data, okay? It's all about the understanding that your organization throws off data. Where you're going to put it, how you're going to make it accountable, how you're going to audit it. Does it give you the evidence to make the claims that you want to make around ESG, sustainability? ESG, for those who don't know, environmental, sustainability and governance. This is not a buzzword. At the last count, Morningstar reported over $1 trillion is now tracking companies and their ESG metrics. So if a company needs capital to survive, you need to prove that you are operating a business model that is sustainable and that is compliant, whether your consumers are asking or your regulators demanding. All of that requires data, and you need to know where it comes from and how you're going to use it. So data is forming the backbone of any economy and any organization within that economy. And that's where blockchain, fundamentally a database, a secure database, a practical database, if implemented correctly, can provide you that tracking and that evidence. And that's where blockchain, in my view, has a real opportunity.
So I think very much filling the gap between having all the data and sharing it between, I guess, all the parties that might need it.
Absolutely, absolutely.
Sharon, any thoughts?
Yeah, absolutely. I mean, I can build on top of that. And I think that it's really exciting because blockchain is a new technology, and we're still, everyone talks about in early days, and we're building applications on top of blockchain, and we're just scratching the surface. Now, as I mentioned earlier, my experience really to date primarily has been in the sort of financial services side of things. And that really, we're seeing a lot of growth there. And again, thanks to COVID, we've seen a lot of businesses looking at what they can do on that layer to deliver faster, decentralized, more cost-effective financial services. that essentially can reach a much, much larger part of the global population. I think that's super exciting. Certainly a lot of opportunity for Coincover to keep all of that funds and movement safe. But I think it goes beyond that. So it's not just about payments and remittances. It's then kind of like looking at the traditional finance and what were the tools we have in traditional finance, how they can be moved to blockchain. And again, not just for the sake of moving it to blockchain, but to really build on the benefits of cost effectiveness, speed, transparency, decentralization. Those are all really good aspects of what blockchain brings. And so we can talk about decentralized finance. And in the last year or so, we've seen things like loans, borrowing, mortgages, being able to buy shares of companies on blockchain in the DeFi space that just wasn't around 2 years ago. And again, it's just giving more people more access to finance that's faster, better, cheaper, and that's just the beginning. So I just think that there's a huge amount of potential that we still just haven't tapped into.
I know a lot of people say that, I guess the digital assets, Bitcoin obviously, which is one of the main examples of that, it's kind of had its day. You know, it's incredibly popular at the moment. Kind of, if you were thinking about it being a curve, it's probably at mass adoption. I mean, what would you say to that, Sharon?
I think cryptocurrency, there's just different flavors. So Bitcoin obviously was the original one. And it had utility. And I would agree that most people today clearly aren't using Bitcoin for currency because it's just essentially too expensive to transact. Not enough people are using it. It still right now doesn't have the rails to be a currency. And so we then came along with the second generation, which is essentially was Ethereum. Ethereum came along, and essentially what came with Ethereum was smart contracts. So I'm not going to get too technical, but basically smart contracts enable you to program money in such that something will happen if something happens. So if you think about maths, if you think about an if and or statement, if X and Y, then Z. And smart contracts essentially are coding sort of like these rules around transactions. So for example, I could send you, David, some cryptocurrency. You could send me some cash as a loan, and a smart contract would basically say you have to give me back that cryptocurrency once I've given you repaid the loan. So there's no middlemen here, for example, and that's essentially the smart contract. That's what it does. And again, this is all about taking away the middleman, making things faster, transparent, cheaper. That was layer 2 with Ethereum. But then it exploded. More and more people are transacting. More and more people are lending, borrowing, using all of these good tools. And so we had to also evolve. So we're now seeing sort of chains or alternatives to Ethereum that again continue to solve the problem. And I think, you know, that will always happen. You won't just launch a cryptocurrency and that will be it. You're done. You launch a cryptocurrency and you think, well, I want to do this, and then I want to do that, and all the things that all these people want to do, which is great. It usually comes with a problem. It's too slow. It's too expensive, it's not transparent enough, or it doesn't give me rules. And so you just have to keep building and building and building. And so I don't really think that Bitcoin has had its day. I think that due to the needs of people utilizing cryptocurrencies, we've just had to develop it out to give the utility that we need. And I think that will continue, well, indefinitely, really. So and also just in terms of Bitcoin, that there's so much ebbs and flows and volatility in the space that we know we're on a down cycle this year, but we'll go back up, and I think also that will continue until maybe 3-5 years. It will probably plateau out, but definitely am not a Bitcoin naysayer. I don't think it's had its day.
Thank you, Sharon. I appreciate that. So, Will, I mean, in your opinion, why is there so much excitement around blockchain, and what would you say to the naysayers?
I'll probably talk a little bit less technical perhaps than the others on the panel, because obviously the established kind of products and services out there. But I think it's all about the kind of the potential, really. So what we talk about Bitcoin now kind of started around a decade ago as a kind of network to kind of these decentralized kind of financial kind of transactions, and mainly is in those days it's for geeks, wasn't it? They kind of set the scene, and also perhaps for criminals as well in that case. Then back in the day, but it's becoming now a decade later. It's become much more mainstream. You've got like organizations like Tesla obviously pushing it. Obviously they've gone back on that a little bit now, but you've got other areas, the governments as well. You've got places like El Salvador which are adopting it much more from a kind of an official perspective. And so it's a little bit like Apple's cutthroat nature to kind of removing things like headphone jacks from iPhones or USB ports and the Macs and things. At first everyone kind of hated it, but as time went on, you've got things like you've got AirPods, you've got USB-C everywhere that kind of works kind of nicely across the board. You probably think, okay, right, maybe they're right, and maybe they're kind of pushing the kind of boundary of things that were yet to come, essentially. And so so now we've got a rich kind of ecosystem of applications that are based on existing blockchains, so things like Ethereum, as Sharon mentioned already, and you've got layer 2 applications, things like DeFi and things I think we'll talk about later as well. And they're all completely decentralized and all publicly auditable. And I think this is why it's exciting. So there's loads of gimmicky things around at the moment. There's things like the current state of NFTs, and but who knows what that all might evolve into as we go down the line. It just becomes actually a more useful kind of a financial transaction, or a more useful kind of official type of transaction. So it's all that from that positive, I guess, forward thinking attitude is quite exciting. There's some naysayers. I don't know. I think there's lots of different attitudes around blockchain. I remember one meeting we had when we were talking about the projects we're kind of working on now, and someone said to us the solution's a bit like trying to hit a nail with a sledgehammer. I'm trying to apply blockchain to this particular piece of this project I work on. I remember thinking it's a bit like some people thought about broadband back in the day when you're happy about dial-up. It's like, oh, we don't need broadband, it's fine. Like I can access the internet fine. You don't need kind of any more speed. It's going to be fine. But it's not until you have it and use it, you realize 5 years down the line actually why this might be useful, and actually why this is a viable technology to use for business or for personal use or whatever it is really. So it ends up being that kind of just useful of everything through the line. So there's also the climate piece, I guess, as well. People, naysaying, hating on, Bitcoin and other kind of proof of work kind of networks because of that whole kind of climate area. And, people saying, obviously it uses a huge amount of energy, but, there's more, networks, things like Ethereum moving to proof of stake and, similar types of technologies that actually power these networks, but on a kind of, which much less kind of energy required. And obviously, that's definitely a bonus as well. So I think for the naysayers, there's different attitudes about why people don't like it. And yeah.
Perfect. Thanks, Will, and I guess looking forward to asking you more about some of the decisions you've made regarding your blockchain solutions as we move through the session. Imtiaz, would you like to share your view on this?
Yeah, when you say blockchain, people actually think more like Bitcoin and cryptocurrency, but it is not the case. If we see the technology, the underpinning technology, i.e. the blockchain itself, it is a beautiful technology, and it is I think it's a foundational technology rather than a disruptive technology. So you can think it is like between internet or the TCP/IP protocol, which is published in 1971, versus the web HTTP protocol, which is published in 1995. So we are in between this time. So if we look at the blockchain, how it transformed, we might can see like Estonia, which is kind of like a leading nation in terms of using blockchain and other digital currency, digital technologies, right? So in Estonia, say for example, it takes only 5 minutes, less than 5 minutes to filing your tax, right? Whereas in US, it takes a day, at least 8 hours for filing a simple tax file. Whereas they also built their whole public services on blockchain, and they claim that it saves their 1400 years of time, right? So operational efficiency has increased, but how it kind of benefit the citizen, ordinary people, right? So there are a lot of initiatives in Estonia, Malta, and other places in terms of using blockchain, but the blockchain itself has its kind of the potential to building trust. It's a trust protocol, basically, right? A consensus-based trust protocol. And as Nish said, that we have been kind of like a accelerated or catapult to a digital virtual world from a physical world, whereas our every transaction is based on industrial mindset and industrial based rules and regulation and things like that. So where trust is enshrined by a middleman like bank or some sort of authority, and they take commission out of it. So say for example, like in shared economy, like in Airbnb or Uber, right? So they take a commission, like Airbnb takes 7% of the commission just to give trust, right? They don't hold any assets or something like that. So, but blockchain can enable this trust in a kind of like a distributed manner. So as such, let's say, for example, we are having a PhD project with a company called Balsami, where we are trying to see how you can put a digital marketplace to sell and buy your health record data. Because now with the GDPR, patients have the right to control their own data. But what will we do with this control? I mean, what will you have your patient record? I mean, your record data in your NHS. And that's why a blockchain will come to place. I mean, if we have a kind of like a distributed trust mechanism, then you can have a marketplace where you can sell your behavioral data, how much your Fitbit data that you are generating by walking, sleeping, etc., and things like that, as well as your electronic health record data. So it will bring a lot of opportunity from government level to individual level. That's what I see as a technology. I mean, even if we just, I mean, do not see the cryptocurrency space, the glamour and the chaos according to that.
Thanks, Imtiaz. And I guess, like you, I'm really taken with the technology itself. The fact that it's like this kind of perfect use of like cryptography and game theory that's kind of going on in order to create that kind of trust system. It just makes it just makes it an incredibly fascinating space to be in. Okay, so Sharon, question for you. How do you think blockchain digital assets are democratizing assets by removing the need for central institutions and the opportunity that you think this is creating currently? And what I would say is, anybody who's obviously watching today, if you've got questions, feel free to kind of put them in the comments and we'll answer them as we go through. Even if you've just got some comments on the facts, I'll read them out as we go along. Go on, Sharon.
Sure. Okay, so I apologize, Imtiaz, because we're going to be back talking about crypto, but I 100% agree with you that blockchain is such a larger space than just crypto. It's just that I think right now crypto gets more attention, I think because a lot of the areas are just, people are more aware of them. It's been around, they've had utility for longer, and it's growing. And I think that's what I'm excited about, what Coincover is excited about. So in terms of sort of like democratizing assets, I think, again, you know, we look at it in different layers and think of this as a global technology and globally how it can help everybody. So you start off, and a lot of people talk about the unbanked. And across the globe, fortunately, you know, it's not a big issue for us in the UK or most first world countries. But if you look across the globe, you've got about 2 billion people unbanked. However, the good news is that about 1.75 billion of them do have a mobile phone, not a smartphone that probably most of us have, but just a typical mobile phone. And what we're doing in the crypto space is we're building platforms that enables all of these unbanked people to send and receive payments, remittances, salaries through their smartphone by taking out the bank, by taking out the middleman. And that does so much to these economies and brings so much value to these people that were traditionally unbanked. So first of all, they get paid for something faster. they can receive monies from relatives across the globe. They also actually have then the opportunity to start saving. If you don't have somewhere to put money, you don't really save it. So, and with the decentralization, this is essentially, depending which particular technology that you use, but because you're taking away the middleman, again, it's faster and it's cheaper. And so instead of, a typical, the statistics, for example, cross-border payments between, say, Mexico and the US, the typical remittance is only something like $300. It's not huge amounts of money. It's basically what people can afford to send over after they've paid their own bills to their relatives in Mexico. But the problem is, on top of that, the cost that it takes to send that $300 over can be somewhere between 25 to 50 pounds, depending on how you do it. And that's just a massive percentage of somebody's hard-earned funds that could go a long way. And we're taking away all of those, essentially, haircuts, right? So all across the sort of like centralized economy, there's just somebody taking a haircut, which is why the fees cost so much. So that is like one area that really is great for individuals. Then we kind of think about, okay, what do people, let's say in the UK, how are they benefiting? So in the UK with DeFi, decentralized finance, again, without a middleman, we're now having platforms that can offer people loans and can also offer people interest if they're prepared to give others loans. And we do that in a trusted, decentralized format. And it's actually really easy. You can sign up for a platform. And if you want to lend money, you can essentially stake your currency. It's held for you, and you're going to get a much greater return than if you put it in a traditional bank. So right now, interest rates are, and have been for the last decade, a diddly squat, hovering around 0.5% if you're lucky, right? Probably not even that. In decentralized finance, the rates are higher, again, taking out all the middlemen, giving it back to the lenders. Then in terms of the borrowers, if you want to actually go and borrow money in a decentralized world, you don't have to do a whole bunch of paperwork that you might have to do if you go to a bank. That's not to say it's not safe. That's not to say that we're not doing KYC on a customer. We are. But primarily, if you go to a platform to borrow money, you can essentially borrow money within minutes if you want to. It's not a big laborious process. And also, again, taking out the middleman, it's making things less expensive. And again, you're going to see much of the old world financial services being moved over to DeFi. People are going to get excited about it because more of the money will be left with them. The interest rates, either that you attain or that you give for a loan, it's going to be back with the actual end users. So that's great. Then you think about something called NFTs, non-fungible tokens. And these are basically digitization of real world assets. This is right at the beginning, early doors on what we're doing with that. But it enables you to, I guess, invest or speculate in assets without having to own the entire asset. So for example, you could have a house that is digitized and it's put as an NFT token, and you could buy 12% of those NFT tokens, and you essentially would own 12% of the house. So you've got this real world asset that we all hope houses appreciate over time, and you don't have to buy the whole house. You can buy a percentage of it. And that's happening with music licensing. It's happening with artwork. It's happening with lots of different assets. But again, it's democratizing it because you don't have to be, wealthy. You don't have to be able to afford and own the whole house, for example. So those are a few of the areas where I think, that the democratization of crypto in this space is just going to help lots of people. But I mean, there's probably a lot more, but I think those are the main three that I would say at this point.
Do you think that ability to, I guess, split the asset is what's driving the price of some of these NFTs in the first place. So when someone's buying the 100% of the artwork, for an example, that was purchased, do you think that that's with a view to be able to then split it into 10,000, a million other subsequent parts, and then selling that to other individuals going forward? And in theory, it justifies the price.
I think artwork right now is a little bit of a different subject. I think that my personal opinion, I think in terms of artwork and NFTs, it's a little bit like the digital version of a Lamborghini. Some people, unfortunately, just have too much money, and being able to buy, a Banksy artwork which was set on fire, and for now to ever be digital, it is just kind of I just kind of, and again, it's my personal opinion, but I see it as kind of like a digital Lamborghini, a status symbol. But again, I'm also not, I'm not into art. I don't know how to, value art. So maybe I just don't know what I'm talking about. But it does, make me scratch my head when I think, wow, he's paid $56 million for this digital artwork. I don't see it, but yeah, others do, obviously. But to go back to But to go back to your question, separating out the artwork, right? So let's say that you do have a real tangible thing like a house. I do think that benefits from being able to split it up, definitely. And you'll also be able to then invest in like the new world of stocks and shares. So you've got all these companies as well now that are in the DeFi space, in the crypto space. They're launching their own token. So that is basically kind of the new world equivalent of having a ticker symbol on the NASDAQ, and people are buying shares of the business and the opportunity that business might bring in the future, which obviously will increase the value of their tokens. So yes, being able to split assets will help, but I'm just not convinced in the art world.
I'm glad you brought up the company piece, and I'd be really interested to hear Imtiaz's thoughts on that, given, I guess, some of the work that he's been doing. But Imtiaz, have you've got any thoughts on that?
I mean, I'm also not, very much aware of the NFT and things like that. But I mean, it's the value of bringing this. Say, for example, one of the, the Tuvalu, one of the country in Polynesian island, they bought in 1996, when the internet first came, they bought the domain name .tv. So they are earning the whole country. They have a population of 11,000 people only. So the whole value, they earn like $5 million every year from the revenue of this domain name only, right? So the whole country runs in this place. So whoever buying this thing now, it's $50 million or something like that. We do not know what would be the value and how this value will be transferred or used in future. We are in completely unknown territory for us now. I think so.
Thanks, Imtiaz. Okay, Will, as a company that is currently developing a blockchain solution, why was this the solution you chose? Why did you choose to go with a blockchain? And maybe you can talk about some of your thought process around, planning a blockchain deployment.
Sure. Yeah, so as I mentioned, so this is moving away from the crypto space again a little bit more, but so our project is around supporting these kind of multi-party agreements in these kind of supply chain type situations. And these could be agreements between companies and organizations in different parts of the world and different regions. And so the legals can be interesting because each country could have its own way of approaching things, so kind of ways of handling kind of corporation law or IP law and all the other bits going on as well. And so it's quite useful to use a single decentralized system that allows kind of everyone to agree on things in the same way, but everyone agrees in the same kind of legal kind of framework, but independently of any kind of country perhaps framework as well. So it's interesting kind of areas there we're kind of looking at in terms of the kind of legalities. And some of the areas looking to solving as well using kind of blockchain are around the kind of efficiencies and trust. So, no one wants kind of bureaucracy in terms of having to like send lots of documents around back and forth, get things signed by 10 different people, all those kind of long-winded kind of processes. And that's kind of, a natural kind of antithesis to the whole innovation process. Innovation is supposed to be kind of almost not spontaneous, but, it needs to kind of, it thrives on that kind of, that ecosystem of people working together in a kind of positive environment that, if you don't want to stamp down by introducing lots of kind of extra bureaucracy into the process, really. And so that's why we thought, this kind of blockchain process could be an interesting one. It's a single kind of process that works across the board, across the different kind of legal frameworks and across different types of companies and organizations around the world as well. So essentially, there are three kind of key things that kind of led us towards the kind of blockchain space. So the first one was around the immutability. So, the fact that, once someone signs an agreement or, as part of this, becomes part of this process, then they can't go back on that process. You can't untransact or unsign something, which is really important, and to bring that kind of that audit trail into it, which comes on to the kind of next point, which is about kind of ordering, really. So once an agreement is signed, the process might allow, one of those parties to continue down the process, to continue to kind of another part of the process, having, completed the steps they've gone through before. And again, that might allow them to kind of interact with other parties in the process as well in different ways, at different time points when people come into the process at different stages. So seeing that kind of audit trail and the ordering of events is really important as well, to track things after the event, as well as during the event as well, to see where you are in the process. And finally, kind of the verification point, so allowing all the kind of involved parties, these people could be directly involved in the transactions, but also outsiders or whoever else needs to be involved in this. Everyone can go in and have a look and verify that these things have happened. And there's obviously issues there with working out how much data to share, if it's a public chain or non-permissioned or permissioned. Then you got obviously this to think about how you might share information on the blockchain that should be private, or should be perhaps just referenced to a kind of internal private database, or wherever it is we work. So we're working through some issues, some challenges there, I suppose, in terms of how we actually deploy this from a kind of technical perspective. So they're the kind of 3 points, really. So of course, all this you can do this without blockchain, and we built prototypes of this kind of this process and software without using blockchain. But it requires, in terms of actually building it into production, that it's going to be used by organizations around the world, especially in these kind of strict kind of intellectual property sensitive areas as well. It requires lots of extra engineering care, really stringent testing, and might be loads of edge cases that haven't been considered, and perhaps offering without the same kind of level of kind of confidence that you get by offering something with blockchain. Blockchain does this stuff inherently inside of it. You can't change things once it's out there. It's done. It's distributed, and so it does a lot of it does a lot of things we're looking for. That means you don't actually have to take so much kind of effort and resource into actually manufacturing and kind of engineering side and the software side. So though it can be complex to develop for, we believe this kind of cost saving is just definitely outweighs a lot of the kind of adoption curve that we face in terms of adopting it. And and I think it offers lots of extra. We've got lots of ideas about how we can take it further in the next couple of years as well. Build further on the blockchain, so perhaps evolve into some kind of tokenization of intellectual property and other areas as well that we might take it forward with as well.
And well, as a CTO of I guess a tech company, I mean, how did you find the kind of process of, I guess, deciding to move from your traditional stack to implementing a blockchain? I mean, how maybe you could give us some flavor for some of the considerations, or what was this a massive endeavor to undertake, or were you able to kind of learn about it and find the resource you need in order to implement a solution like this?
Sure. Yeah. So we're not looking to really replace anything we already have. We use kind of traditional.
Just wondering if you've got.
Yeah. That's right. Yeah. I was going to say. So what we're trying to building is like an app. Essentially, is extra functionality to our existing software. So we have an existing architecture. We have an existing stack, existing database, and things. So what we're looking to do is build something on top of that. And so it's essentially. So we're hopefully not replacing anything. So we're still a blockchain is essentially another type of database. So essentially adding new technology onto our stack to allow us to kind of better exploit some of these new features, allows us to kind of provide this better service, I suppose, going forward. In terms of kind of finding people to and resource, obviously it's blockchain engineers. Essentially, people classed as blockchain engineers can be few and far between. It can be quite expensive because it's although as a concept's been around for over a decade now, but people are only, as kind of Sharon alluded to earlier, people are only kind of starting really to kind of come to space in a kind of more mainstream in the kind of last few years, really. So people have actually spent time training and learning, and actually, if they haven't been part of their normal day job so far, then how would they find the time to actually take those skills on? But I mean, we found there's so much resource out there. There's loads of managed blockchain services available that you can use. There's lots of really nice bits of kit that you can kind of play with at home as well to try things as well. And so we've been experimenting as a team in various areas and working with and having kind of collaborations with other kind of universities and other kind of organisations around South Wales as well to help build this out. And yeah, so it hasn't been a massive blocker for us. It's just been an interesting and exploratory project.
So I guess your advice to other CTOs who might be considering, changing what or developing another product to sit on top of what they're currently doing, I guess that would be go ahead and do it, and it will create a whole bunch of other opportunities for you.
I think so, yeah. And I think it's also around giving us like team space to explore. I mean, if you have an engineering team, you have software developers in your organization or in your company, and you have some ideas, then perhaps it's sit down together and work out together. Look, this is where we're trying to get to. Can we do this? And got bright minds in the organisation. They'll come up with ideas. You give them the kind of tools and space they need to do it. Then things will emerge, I think, and things will happen.
Thanks, Will. Okay, so Imtiaz, question for you. Why do you think blockchain is appropriate for kind of large organisations, especially public sector ones, and how do you think it can be used to transform the public sector and I guess issues that you typically find with trying to decentralize a heavily centralized system?
Okay, so I mean, I can give an example from our project with the Companies House, which is which holds the company records for about like 4.5 million companies across UK. So I mean, in this centralized system, current system, they have to kind of work with other government agencies like HMRC, Land Registry, police, and other agencies. So the way they work is this is data dump, right? I mean, because they have to share data, right? And the data interoperability across different agencies, from technical point of view, as well as political point of view, as well as like administrative point of view, is a huge challenge, and they do it in a kind of like a intermittently data dump kind of thing. So that is the problem with the challenge with any type of centralized system. This because they are work in a data silo kind of environment. So when we start to work with this Companies House, the main challenge is how you can efficiently do data interoperability. But again, you have to think about that. You cannot change their current environment, the data management framework and things like that. I mean, with this type of huge organization, you just cannot do it. I mean, it stir up many issues. So, in one hand, you cannot change their environment, and other hand, you have to guide it by their policies and regulations, and currently GDPR and etc. etc. So different policies. So you have to kind of maneuver within this maze, I would say. So what we suggested or developed this proof of concept is that a kind of middle layer solution, like we have built a public-private blockchain-based hybrid system that is work as a middle layer, and it connects to different native databases. And it kind of, with smart contract, it collects the information from this native database whenever there is an update, and kind of in sync other databases accordingly through RPC protocol and things like that. So the benefit of it is that we don't have to change any native databases. Secondly, with the private blockchain, which is the Corda we are using, that data remains within the system or within the organization. That is, we have to adhere to the policy, and we only put the hash of the data transaction to the public blockchain in Ethereum, so that there is a level of immutability to that. So this kind of like makes that the front end, the data producer, i.e. the people working at the front end on the databases who are data curator and things like that. They don't see any change. So there is no cultural change or things like that. You do not have to imply to them, and they don't even have to change their database structure or the diagram or whatever things is there. But it will work as in sync. So that is one of the challenge, and that helps that kind of says, you can say that it brings the proof of value. So then the question is that what is there for the citizen, the taxpayer? So one of the great benefit is that this fulfills this once only principle of European Union. So once only principle is that currently if you register your company with Companies House, you have to go to HMRC website and fill the same, almost the same information, HMRC. And if your company is in a state, then you have to go to land registry and fill the same information. But since with this type of proof of concept, since now everything is kind of like a in sync through the blockchain network, citizen can only fill the one information here. Everything will be synced accordingly. Say for example, company turnover, it is important to HMRC and Companies House only, but not to land registry, right? So various information according to the smart contract will be synchronized across the agency. So, and another very important thing is this zero knowledge proof, right? So if some company wants to get loan from the banks, they have to submit their HMRC tax return, Companies House update and everything. But only thing maybe for this, the bank wants to know whether that company has a turnover more than 1 million, right? So whether it's a £1,300,000 or 1,015 million pound, it doesn't matter. So with this type of, because this turnover transaction is will be, the hash would be in the public blockchain, so they can prove that with this zero knowledge proof. So that will facilitate the program too much. Very much, I would say.
That's great. And I see a lot of opportunities where people are saying, look, I want to take on solving an entire government problem with my blockchain solution. Have you got a quick piece of advice that you could give them? I'm mindful of the time, so a quick piece of advice.
You can solve the whole problem, but if you can work with this, connecting with the layer of the current IT system or the database system and the rules and regulation, then it don't take out everything whatever been developed currently, just to kind of adhere. Use it as a conduit and not as totally change the system. That is the one set. And another thing is that change the mindset. Because everything is, our mindset is obviously industrial age based mindset. So where we have to trust authority, but here you can do a decentralized system, and blockchain gives us that opportunity.
That's great. Thanks, Imtiaz, because I know actually leading into Nish's question, I'm sure he'll have a lot of opinions on having to, I guess, convince people to change their mindset into the digital world, away from that kind of industrial world. Nish, do you want to quickly share your opinion on that? Or?
Absolutely, and Imtiaz and the other panelists, Sharon, well, thank you for your comments. It was very interesting to follow. And the world that we live in maybe pre-COVID or pre the digital journey that was already happening was analog. How many times have you heard, in order to share information from one party, one stakeholder to another stakeholder in a supply chain, a value chain, as Imtiaz put it, in a banking process, Sharon referred to, it goes through what I call that translation through Excel. Where someone is taking data from here and putting it into an Excel and then moving it forward, touching the data, manipulating the data, inadvertently maybe changing the data, and you're coming out with different results. Imtiaz referred to Industry 4.0. That only works if data is pure, right? You know, AI and ML can only come out with results that you can trust if the data is not being contaminated through its journey, right? And if it has been contaminated or goes through an Excel translation, how can you trust the results? So we are moving into that digital world, and that part of that movement is going to take us from, you know, David, you'll appreciate this, batch processing, which certainly, I mean, I grew up on when I was coding, you know, to real-time processing. How many times do you hear that the products on our shelf have been sold and we receive the non-compliance certificate 2 weeks later? That's the world we live in. And that world has got to move around the other way. Well, that data is going to be real world, real time, and enable you to make constructive decisions on what you're doing with the ultimate product. What does that mean? It means more agility around your data. Unfortunately, COVID has taken us in a slightly different direction. We built a globalization world which was reliant upon data, just-in-time manufacturing, and we've realized that breaks when you start putting barriers up against it. And those barriers could be COVID related, it could be trade related, sanctions, political. You know, we are in a different world that requires resilient data and requires that data yet to be agile and delivered to you so you can make decisions on how you move forward in your business operations. And let me give you a couple of examples of some of our customers and the way they are using blockchain. And I see as part of that new world adoption, right? Repsol, global energy giant, are using our blockchain solution to digitize downstream supply chain, right? This is from extraction of oil in the ground all the way through its supply chain and production processes. So they can start providing evidence of where it came from, what it looked like, in order to supply those products in different geographies and different formats. Stahl, I'm not sure how many of you know, but they're one of the world's largest, about the leading manufacturer of chemistry in the coatings, processing, treatments of fabrics, materials such as leather. Huge global organization. They're using our blockchain solution to digitize the library of their chemical substances. So this is from source. Why? Because at the end, their customers are saying and asking, where does it come from? What's its renewable raw material characteristics? And how can I trust the data that you are providing me? Well, you can trust it because they're capturing that data in a blockchain environment and enabling their customers access at certain levels to confirm what they need to confirm in order to be able to sell that product. These customers need easy, real-time, provable, accountable, auditable data at the time they are selling their product. And that can only happen, as Imtiaz said, using the inherent characteristics of blockchain, which is it's an auditable technology. We want a world where we can trust what we are being told. It's an accountable technology. Insurance companies, for example, how can you make a claim on someone down your supply chain if you can't prove they told you something that was wrong or they didn't do their part of that equation? It's an immutable technology. That doesn't mean it needs to be fully transparent for everyone, but everything is stored so you can track back and assign accountability and also transparency when it's required. So unlike the public blockchain world, we tend to operate in a private permission blockchains. One of our customers is the London Chamber of Arbitration and Mediation, who are now assigning a mini blockchain, think of it as a small implementation of blockchain, around a specific dispute resolution case. So where you have two parties, a claimant, defendant, maybe two arbitrators, maybe an independent arbitrator and their lawyers. So a mini blockchain put around them. I call it a walled garden. But these are
great. That's great. Thanks, Nish. Sorry, I'm going to have to just move this along a bit, just for timing. But thanks for that. I mean, one of the questions I did have for you, Nish, was, how difficult is it for these companies to implement, a blockchain solution like this?
Well, that's the challenge, right? So you've got organizations who are building from scratch and looking to the future. As Will pointed out, this will be part of a future journey. In our case, we put it into a product implementable today.
Perfect. Thanks, Nish. Okay, great. So final question, and I guess to the whole panel. Why is Wales a great place to be located, and I guess what would make the blockchain scene better in your opinion? I guess we could start with Imtiaz.
From my perspective, I mean,
just be mindful of the time. So if we can have a quick one, then
yeah. So three things. So one is this. I mean, there is a hub for, especially in South Wales, a hub for public sector organizations. Different big sectors, public sectors, are coming from London. Secondly, the agriculture sector. There is a huge potential to kind of putting blockchain-based infrastructure on agriculture. And thirdly, is this border issue in post-Brexit, because there are few ports, I mean, from Holyhead to Pembroke that we share with Ireland, which is an EU country, and there will be issues as you see in the news and things like that. And blockchain can solve these problems.
Great, thank you. And I guess coming from your perspective, there's a number of academic institutions who are working quite hard to support the blockchain industry as well, aren't they?
Definitely.
And it's probably worth pointing out, if anyone needs some PhD support, I'm sure Imtiaz would be more than happy to have a conversation with them about it. Nish, obviously as a company that's just come to Wales.
A couple of quick comments on that. Thank you. Talent, quality of talent, access to capital, and in that we've just received an investment from Development Bank, and finally the most important one for us, which was David Blake.
God, Nish. God, thank you. I appreciate that one. Sharon?
Well, obviously, I have to say a thank you for DevBank Wales, because they are, of course, one of our sort of funders. So that's awesome. But I think in general, like also with COVID, it's been awesome for startups, because I mean, look at all of us, right? We're all sitting in our bedrooms and having conversations. And 16 months, however long it's been that we've been locked up, 16 months, this is normal now, right? But, you know, back in the day, we would have to go into London and have conversations, and it's a big round trip, and it takes time and effort. But now you're kind of having conversations about multi-million-dollar deals, and you're in your bedroom and no one's looking down at you. And I think COVID has just made Wales an awesome place to be. So here, you know, we've got access to cybersecurity businesses. We've got access to more of the traditional financial services businesses. So obviously we're going and looking at those companies and poaching those employees as well. And then now in the world of COVID, you've got essentially that great work-life balance, right? So, you know, we've got the great outdoors, we've got fresh air here, we can work from home, we can interact on an international scale, yet we've still got affordable housing, we've still got amazing outdoors. And there's just so many opportunities, including, for the record, if anyone is looking for a job, Coincover is hiring at quite a fast pace right now, and we are bringing opportunities to Wales. So I think Wales was a place to be before, but now with COVID, I think it just makes it even more attractive to many people looking to get into the tech space.
That's perfect. Thank you, Sharon. And Will, finally.
Yeah, just to echo the others, really, just to say also, yeah, DevBank's an investor in us as well, and it's been great, the support we've had from David and the rest of the team there has been fantastic as well. But otherwise, generally in Wales, from a tech perspective, I think, you know, the ecosystem and the collaboration between business and universities and government as well has been really strong. So the support we've had from various the communities there, we've been heavily involved in various kind of communities as we've grown as a company, and be able to kind of have partnerships with universities and support from government has been great for us as a business. So yeah, I don't think we could have done it anywhere else. So it's been great for that.
That's great. Thanks, guys. Right. Okay. So with that in mind, I think we'll draw the panel to a close. I'd like to thank all of our experts for sharing their opinions today. I hope that's been interesting for everybody involved. It certainly has been for myself. Thank you very much, and take care.
Thank you for watching. Rewatch all of our sessions online. Thank you to our partners.